Stock market today. Analysis for Wednesday, January 11th, 2023. You hear that noise? That noise? Somebody's drilling something somewhere in this building I live in. So I apologize. And we're going to get on with the show anyways. Moving into the show. In the description of this video below, there's a link to ihavesuccess.com. The biggest value I Have Success can give somebody is to help you begin your trading journey by learning how to sell cash secured put options. The reason why cash secured put options is that when you're selling cash secured put options on a stock that you don't mind owning, a good fundamentally sound company, which isn't really that hard to figure out, then at contract expiration date, it doesn't matter what happens. For example, you may or may not know what a credit or a debit spread is. They're similar, but they're two different things, right? So we have cash secured put options, credit spread, debit spread, right? Out of those three, when you set up a cash secured put option properly at contract expiration date, anything that happens, you win. With a debit spread or a credit spread, there's a possibility for you to lose money at contract expiration date. I guess there's a possibility for you to break even. There's a possibility for you to make money. But if you're relatively new to the markets, and you're somewhat busy, or you just want to have a strategy in your back pocket that if you're going to go on vacation for a couple weeks, you can load up on selling cash secured put options on stocks you don't mind owning. If you like owning stocks, you should really know how to do this. Why not get paid to wait to buy the stock at the price you want it? If that interests you, you can go down in the description of this video. There is a link to ihavesuccess.com. Not only can you read about your good buddy Brent right there, but more importantly, you can get this cash secured put stock selection guide. 3 stocks I sell cash secured put options on. These 3 stocks, there's a high chance they're not suitable for you. They're probably not the best stocks for you to be selling cash secured put options on. But fundamentally, and I don't mean enterprise value over EBITDA fundamentals. I mean as far as like understanding what certain what to think about past fundamentals. What is obsolescence risk? How do you can you choose some stocks that are more prone to obsolescence risk than others? Things like that. No, with that, and also in that same description, there is a playlist called like Trading Options for Beginners, with beginners in all caps. That's got 5 videos in it. That video will help you get some charts set up. It'll walk you through, what is a cash secured put option, what is a naked put option, what is a covered call, what is a naked call, what's the differences, what's the wheel strategy, which is basically just selling cash secured put options till you get assigned, and then once you get assigned, you start selling covered call options. Kind of tell you the pluses and minuses. And the 5th video in that will show you how to use the Yahoo Finance screener for free and give you a basic setup to screen for some fundamentally sound companies. Is it the be-all, end-all? No. Is it a wonderful place to begin your trading journey? Absolutely. And if you don't want to deal with looking at all these type of charts and knowing all this type of stuff, then why not just keep it simple? Why not just buy some income-producing assets and get paid in the process? That's pretty simple, right? Over your lifetime, maybe you can build up a good portfolio of dividend-producing stocks that you've lowered your cost basis through selling options. It's really quite a beautiful thing. We're looking at the futures right now. Oh, one more thing. Right here at 4 minutes and 30 seconds of this video. So it's coming up. Right over here at 4 minutes and 30 seconds is going to be a video that pops up about why. Get ready? You ready? Here it is. There it is. Boom! There it is. Now you don't have to watch it right now. Just remember, 4 minutes, 30 seconds. Right? 4 minutes, 30 seconds. Watch this video, go back, watch that one, and then it talks about 5 reasons of why you should. Why? Not how, not just because you'll make money, some bigger reasons. When you hear these reasons, you might be, holy moly, yeah, I guess I can get some bigger life benefits out of this. So take a quick look at the futures. Now the futures, You might think that this is like what is going to happen in the future. Not quite. You can learn, you can learn about exactly why the futures market was set up. But some things like gold contracts, right? You can buy physical gold, you can sell physical gold, or you can buy and sell the futures contracts. Same thing with silver, oil. You're probably not going to buy barrels of oil, but you can still trade the price action of it off the futures contract. Now, we're not looking at these, well, I don't know why you're looking at them. I know why I'm looking at them. Sometimes I'm putting trades on these futures contracts, and sometimes I'm just looking at them as an indicator of what might happen in the future. Now, they're not made to figure out what might happen in the future, but you can use it. VIX really dropped right here. Right now we're around 21. Slowing it. This candle right here, see this big drop right here? It's not another big drop though. We had some continuous, like sort of like the same, at least the same trading range, right? This candle right here, the body of this candle was bigger than the body of this candle, but the trading range, even though this one was a tiny bit bigger, it's still roughly the same, kind of in the same trading range. For example, look at that. Look how narrow that trading range is compared to this. These three are more close in trading range than this one, right? So we had this kind of a steady move down. It was almost like red candle, green candle, right? Red candle, doji, green candle, red candle, right? Doji. These green candles, these aren't doing much. These are just like mainly indecision candles, and these red candles are really coming down. And this big one right here. So sometimes what happens is at the, you might begin a sell-off with a big candle down, which is kind of like that, or you might end a sell-off with a big candle down. So maybe that's what we have going on here, because that's not much of a candle, right? What's going on right here? So maybe it's going to get to be about 20, 21. These VIX contracts come off from basically option action off the SPX. Here's the S&P 500 futures. Boom, bumping up against that 200-day moving average. What's going to happen? We'll see. We see what happened last time in the last month. If you look at a bigger chart of the S&P 500, you see over the last 12 months, it's just been going down. That's why this 200-day moving average is going down, right? Slowing momentum, at least on this candle. Now this candle, I'm at 1:19 p.m. Hawaiian Standard Time, but this candle is trading in Eastern Standard Time, so I think that's probably still on the 11th, right? So I had this candle right here. We got two ups. Same thing here. Same thing here. We talked about that. These two being green, these two being red. But all four of our major indices here, right? Let's see what's going to happen with this candle. But strong candle. One thing to really take note of is all four of these, and maybe with the exception of that one, it looks like price was really. Now look at that. Oh, you can see that. I don't know if my cursor disappeared, but look at that green candle, that big one. You see there's just a tad bit of a little wick. Just a tad bit. That means price is pulled back just a tiny bit. But look at this one right here. Right? Watch when I zoom in here. Not the same, right? Price is pushed all the way up to the top. So on 3 out of 4 they were doing that. On the fourth one that didn't do that, on the NASDAQ, barely pulled back a little bit. So that's pretty bullish when it's to the upside like that. It's bearish when it's to the downside like that. 10-year treasury. All right, so in the last month we're seeing a low and a higher low. Looks like maybe this is just going to be a total ignoring of this big bull candle here, because look, we closed here. Now we're like 2 days later, we're kind of back to right where we were 2 days ago. Crude oil is it's pushing to the top of where it's been in the last couple days, this 75-ish area. When I say a couple days, look at this right here. 1, 2, 3, 4, 5, 6. Right, the last 6 days. I've been watching crude oil on a 15-minute 2 or 3 day chart. So in the last 2 or 3 days, it's definitely pushing to the high end of the range there. But in the last month, 81. So how close to 80 is it going to get? We will see. Natural gas just had a smooth move down. Is it slowing down? I don't know. We got these little green candles. Looks the same, right? Not exactly the same, but it looks pretty. This one looks pretty close to this one, and we'll see if it's just going to drop down lower. Gold seems to be running out of some steam to the upside. Had a lot of steam to the upside, pushing up here with a huge. This candle, look at this. This candle just gets totally ignored. I guess certain buyers maybe took profits here, sold their closed their position by selling, and then there was still people wanting to buy, coming down to this price, and buying pressure is put in. But the momentum going up is slowing down. Now, is it gonna come back down, or is it gonna build a new? Is it gonna start building support somewhere over 1860? And it looks like silver seems to have been in a decline for a couple days. Just like here, we had this bear candle get ignored. Right here, we had this bull candle get ignored, right? And it just continued back down. A couple days ago, I was talking about you look to see how fast something goes back to where it was. So, for example, right, we had this sell-off here. You get this big bull candle right here. And then the next day, next candle, prices are trading in the top 50% of this, the top 50% of this bullish candle. But 1, 2, 3, basically 3 days later, you're back to this bottom end of the range. So you can tell this up rally is not very strong. The up momentum is not very strong when 3 days later we're back, basically back. Prices being almost to where we were right here. So prices dropped here. The next day they went all the way up to the top. Right? Opened here, closed here. Very next candle opens exactly where it closed, blast up to here. Closed a little bit above where it opened here. So if someone's thinking, wow, that's really, really bullish, we're off to the races. Nope, because the next day, boom, trades down here. Second day, boom. Now we're like trading past into 50%, but it closes still in that top 50%. Third day, boom, opens in the bottom 50%, trading in the bottom 50%, closes in the bottom 50%. So hopefully you can kind of see what I mean by that. And so just try to use that in combination with your candles for whatever underlying asset you're looking at. How you could do the same thing of here. We had this big sell-off right here, right? Prices up here, sells off here. How long does it take for the next, how many days does it take for prices to regain this? Well, in this case, it took 1 day. Look at that, 1 day. So that tells us this seems like a pretty strong bull trend at the moment, right? Because it only took 1 day. Whereas, you know, as far as bull trend here, no, it doesn't seem very strong because prices are back down here. And Bitcoin, just kind of doing what Bitcoin's been doing for like the past year or so, is just kind of moving sideways. It starts looking like it's going to go up and then falls down a little bit, and we'll see if Bitcoin, you know, like, yeah, Bitcoin is pretty bonkers. I don't know where all the YouTube cult of Bitcoin people are calling for Bitcoin. You know, where do they go? Why is it that when a paper asset is going up, you got all these people that before YouTube, I don't know where they would come out. They would you know, be in the I don't know, I guess the newsletters. But now that there's YouTube, it's like, oh, come on to YouTube, talking about how high it's gonna go. Look at me, give me attention, because I'm claiming big numbers, big numbers, big numbers. Look at me, look at me. Don't look at these dorks. The only person you really need to listen to is yourself. Figure out what works, add more of what works, drop the things that don't. Don't listen to people that you don't know what their motive and agenda is, but you know what your motive and agenda is, right? You do. Maybe sometimes, maybe it's a little unclear, but listen to yourself. Nobody cares about your money as much as you do. You don't necessarily don't be impressed by these people. You don't get to do a financial audit on them. You don't get to see how much money they really have. They're just on TV talking some jibber jabber. Might be true, might not. But you know exactly what's going on in your life. So just focus on that. General markets. We already talked about gold, crude oil, Bitcoin. The dollar. All right, so the dollar is still in this range down here. Right. Yesterday I was having lots of fun with that drawing tool, drawing how it's in this downward trend. Now the dollar going down, and I've talked about before. Maybe you heard it, maybe you didn't. But I talked about how, sometimes it's not so much the value of an asset that's moving up and down. It's the how much fiat currency notes does it take to purchase that asset that's moving up and down. So one thing to kind of add on about that is if the dollar continues to go down, should not be a surprise to anybody. Even the people that act surprised shouldn't be a surprise. And the reason why I say that is because, very notably, this is not the only person, but a very kind of, if it's infamous, famous, notorious, whatever, you insert the proper adverb that you need. And this guy, Peter Schiff, has been calling for a crash of the dollar for a long time. He's not the only person, but he's really, really vocal about it. And other people have too. Jim Rickards, going back to currency wars, was talking about declining in the dollar. Probably Gerald Celente. These are some popular names, So if the value of the dollar continues to go down, and this idea of being the cleanest dirty shirt in the hamper, eventually wears out, people shouldn't be surprised. And if they act like they're surprised, it either shows you that they're incompetent or that they are somehow misleading you. But it's still in this range, right? You can see this kind of downward range that it's been. Now, whether you're looking at the dollar or whether you're looking at whatever this is, happens to be TLT. Now, you see this little channel? This is going up, this little channel going down. Same thing here in gold. You got a bit of a channel going up. Could you say you've got a potential channel going down? Possibly. Right? I don't see it as strongly. I mean, we could do it in all these different places. But here's what I'm trying to get at. Is if you can identify a channel, you can potentially trade the channel. Now, in this one, if this was a really strong move to the upside, then I would forget about gold. Right? Just forget about it being a futures contract, right? Because it's probably not the ideal thing. Let's just look at the pattern here. As it were to float back down to here, then maybe I look at some sort of strategy that I would profit with it going back up here. Doesn't mean I buy, maybe. Or maybe when it gets down here, maybe I sell something down here. There's different ways you could do it. But just realize that if you can pick out something. That's why sometimes it really can be a benefit to just trade a very limited amount of paper assets. I'm not saying invest in. Those are two different things. Trading and investing, those are two different things. But to trade a very limited amount. Because if you only trade one particular asset, or two or three, but let's say you only trade one, you master that one. TLT moving up. What's been happening for X amount of time, I'm not exactly sure. TLT has kind of been leading what the stock market is doing. And we see that still kind of playing out. Stock market been going up. Now VIX, just like similar to the VIX futures, yesterday we got lower. Today we're up a little higher on the VIX. And VIX is kind of like known as the fear index. We see in the last month this has been as high as 25 something and as low as 19 something. So we're kind of towards the lower end. How much lower? We will see. And we got our Russell 2000 index above the 200-day moving average. We got the S&P 500 moving towards that 200-day moving average. And we're not even close to the 200-day moving average here. So tomorrow we want to see, and through that, not just tomorrow, but through the next, let's say, end of the week and into next week, we want to see is this is the Russell going to stay on top of the 200-day moving average? Right? Because if it does this, if it just breakout point and failure, then no, it doesn't. We want to see what's going to happen. Is S&P 500 going to break out over that 200-day moving average and stay above the 200-day moving average? And for your good buddy Dow Jones Industrial Average here, we probably want to see it somewhere. What's it going to do? Kind of somewhere in this area. In the last month, this is we're only looking at 1 month of data. You really want to dial it in, you got to look at more. But just a quick look, we want to see what's going to happen in that kind of area. And what you can do, if you so choose, to get a better idea, right? So we're just to reemphasize, like if you only want to look at 4 things and have an idea of what the whole stock market's doing, this would be the 4. Because you got if you just want to look at one thing, it'd probably be this. You got 500 different stocks. Now, some people might get nitpicky and they say, yeah, but out of those 500 stocks, there's only like a handful of stocks that really make up the weight of it. Yeah, hey, it's an imperfect world. So what are you going to do? You're going to look at your bank account and come up with excuses, or are you going to make money? It's up to you. I don't care. I literally don't care. Whether you make extra money or not does not affect my ability to buy a Subway sandwich. Right? There's only one thing that affects my ability to buy a Subway sandwich, and that is what your good buddy Brent decides to do. So I get it. This is imperfect. I'm trying to make profitable financial decisions with imperfect information and not being necessarily the greatest trader or investor that has ever walked the face of the earth. But I'm not going to let that stuff stop myself. I'm not going to let my insecurities and all these different things stop myself. And if I were you, I wouldn't let it stop you either. Why? Because you know why? Because it's a lot more fun to be full than to be hungry. So you could just look at one thing. I mean, look, it's only 4 things. Put them on your chart. Big deal. Put the VIX on there, right? You got basically the whole stock market covered right here. Now, if you want to look at it a little more in depth, you could break it down into these. Now, some of these are kind of minor sectors. I don't mean mining, but I mean not major. Some of these are major sectors of the stock market. Some of them are a little more minor, retail. But we're looking at 12 different sectors of the stock market, and just at a quick glance, we see technology's been moving up. It's been moving down for a while. Like last year, it's really been in a bear trend, moving down. Look at this. Financials, really. Now, it used to be that healthcare was taking the lead like this, but now it's financials taking the lead, which tends to happen year after year after year after year. They need the financial stocks have a big impact on the rest of the stock market. Industrials starting to move up too, or have been moving up. All right, basic materials been moving up. Communications been moving up. Even retail, look at that. Finally, retail, boom, testing that 200-day moving average. What's going to happen? We'll find out. Real estate, even real estate, boom, real estate sector's taking a push up, while the actual real estate market might be taking a push down. Oh, utilities, all right, utilities kind of moving up, and consumer staples, look, showing some weakness there. Consumer discretionary taking a move up, and energy from down here in the low, not too long ago, just 80, 82 something up here, pushing towards that 90 mark, 88 at the moment. We'll see how that goes. So let's take a quick look at interest rates, just because I haven't looked at them lately. Interest rates. All right, we see interest rates draw your attention right here. This is the 10-year treasury, which is also right here, and that's in green. And this purple is the SPX. SPX has been moving up, and over the last weekly, I think this is 1 year. Over the last year, you see that the SPX has been moving down, and the 10-year treasury has been moving up. Now, lately, 10-year treasury moved down a little bit, kind of moving sideways, while the SPX has been moving up. This is kind of short term. This is 20 to 30-year treasuries. This is 20-year treasuries, and this is I think 1 to 3, and this is like 5 to 7. So they're starting to. We got a couple green candles, but overall, what is this? We're looking at 1 month, and I think it's like is this a monthly chart? I forgot exactly. let's take a look. Yeah, looking at 1 year, and each candle is representing 1 month. So we see overall it's been in this downtrend. Looks like the 10-year closing at 3.6, 2-year. Look at this. You hear people talking about the yield curve inversion. Look at how it's basically you get paid much less to take more risk loaning your money for 10 years. They being whoever, I guess the government, whoever runs these treasury auctions, they got to pay people more money to loan them for 2 years. Now, if you're going to loan me money for 2 months or 2 years, which one do you have a higher risk? If I'm supposed to pay you back in 2 months, do you have less risk or more risk from 2 years to 2 months? I hope you said less risk. The shorter the duration of the loan is, the less risk it is, right? You're supposed to get your money back faster. So for a 10-year loan, they're paying people less. Why? Why do they got to pay people more? Why? Why is that? Well, it might be because even though we see the stock market going up, if the stock market is an indicator of the economy, which it isn't anymore, but if it was, then a higher upward moving stock market would indicate strong economy, right? But what we see over here, we're not seeing an indication of a strong economy. We're seeing something. So be careful. That's the point of this. Be careful. This might be we might not be out of the woods. This might not be the beginning of a bear market. A bull market. Now, what I've been saying for quite a while, and why am I saying it? Because I believe it. What I've been thinking for a while is we're in this starting at around the beginning of 2022. We were in a bear market. And I think it's possible that we might find that 2023 we go from a bear market to a sideways market. Now, is it going to be at exactly that number and this number? And give it a little bit of a wiggle room. I would not be surprised at all if we saw some sort of trading like this throughout the year. Hey, don't take a photocopy of this right here and say that I'm thinking this is going to happen. I'm just making some squiggly lines showing you that it's could be between these ranges. Now, during oh, doggies. There we go. During this right here, that, whoops, my straight line is not very straight. These big bull runs right there, there is a high chance they were from QE or Operation Twist. Where do these dorks come up with this stuff? Somehow they come up with an Operation Twist. What is Operation Twist? I don't know what the details are, but I know what the end result is. Whoop, up in the stock market. Whoop, up in the stock market. Whoop, up in the stock market. They said, no, this is not quantitative easing. This isn't QE. It's different this way, but it's still giving the same result. All right, so unless they come up with some new program, whatever name they call it, who cares what name they call it? If the end result is that it pushes stock market up, then push the stock market up. So I tell you what, you don't make more money in your brokerage account by knowing the right terms. You make more money in your brokerage account by making money. You might not know the term of something. Now, knowing the term might make you help money, But sometimes people know terms of things and they're still broke. You ever met somebody that's knows all the answers, they don't have any money? You ever ask them, well, if you're so smart, if you know all the answers, why are you broke? Why don't you know how to get money? Seems like some people aren't that smart and they have money. So there's more to it than like knowing some names. So anyways, here's the point. All right, so maybe some sort of sideways in kind of a range-ish somewhere in there. You can probably see it happening. Probably see how price is kind of getting caught, right? It looks like it, you can really see it in there. Look, it got down here, goes up here, now it's back here. It's just kind of in this range, and we see it a little bit happening right there. So maybe that's going to happen. I wouldn't be surprised. Maybe if it breaks, this is actually, just want to balance everything out for all of our number fans here. So we talked about this number right here, 420. Some people they have a lot of chuckles and they think it's real funny when you say the number 420. Well, just to balance things out, some people have a lot of chuckles and they think it's real funny when you say the number 357. So whatever spectrum you're on, it doesn't really matter to me. But there you go. We got all those numbers for everybody. So if it breaks this around somewhere around that 357, if it starts testing this 360, 357, it starts breaking that, then we're probably going to see a lot of action to the downside. Is there, like you probably see the news, they talk about all these layoffs, this company's laying people off, that company's laying people off, politicians talking about we have to send more weapons of destruction over to Europe, we've got to keep the killing going, we've got to kill people to protect people. So is war the best thing for the average person in the economy? I know it's great for Raytheon. I know the politicians get rich off from it, but do you work for Raytheon? Or do you got a lot of stock in Raytheon? Are you a politician? Probably not if you're watching this. Right? If you're really trying to learn something from this, you're probably not a politician. You're probably not somebody that's going to profit from the spilling of blood of innocent people. And so if that's going on, is that really great for Dairy Queen? Is a world war, great for the majority of industries? No, it's great for a couple warmongering industries, and that's about it. So my point is, like, it's not like we're in all rosy sunshine of economic forecast here. I know people are on TV saying, oh, there's nothing to worry about. In the big picture, we're all dead. So if you want to look at it that way, yeah, we don't have to worry about anything. But there's a lot of pressure. I think there's a lot of things going on that they're just not positive. So unless the government or the quasi-government agencies, whatever, unelected quasi-government officials start doing some sort of program that pushes things up, I don't really see how it's going to go up. I could see how it might not go down, though, because even though there's this bad stuff going on, bad according to my opinion, because I'm not a warmonger, I don't like I don't like bloodshed of anybody, so I'm just not all into that. I'm not into like a bunch of people getting fired. That's just not my thing. So so that's why I say quote unquote bad in my opinion. You don't think that's bad, you think that's good. It's like you like vanilla, you like chocolate, whatever, it doesn't matter. So even though there's those things going on, which would put pressure into the stock market to push it down, there's the plunge protection team. There's things like quantitative easing. Oops. Let's put this Q right there. There you go. Quantitative easing. Plunge protection team. Operation Twist. Stock buyback programs. There's all types of things that there's downward pressure going. If components of the plunge protection team and whoever quote unquote they are, if they want to, they have some things that they can do to try to keep the stock market from going down. Why would they want to do that? Well, let's say an election's coming up in the next, I don't know, year to 2 years or something like that, and no matter if you're a Democrat or Republican or a non-political party person, there's no politicians in power that necessarily want to take credit for the stock market dropping and people's 401ks and retirement accounts dropping when they're in office, right? And so, because then, you know, I know they'll blame it on somebody else. That's always what they do. Blame it on somebody else. But, you know, it's like they would rather not have to blame it on somebody. They'd rather just have to, you know, point at the stock market and say, look at how great the economy is under us. You know, that's better than blaming. Of course, they won't take any responsibility anytime, so they're always going to blame, but they prefer to just take accountability, even if they'd rather take responsibility for something that they didn't do versus take responsibility for something that they did do if it has a negative impact. So they'll probably use these to try to keep the stock market from going too low. Where is it going to be? I don't know. Probably somewhere. They probably don't want to go in too much lower. But because there's these bad forces in the economy and you got stuff pressing down, right? Maybe it can't go up too high. Maybe it'll be stuck in this range. So here's my prediction, my forecast. I think the most likely outcome, sideways. Second most likely outcome, down. Third least likely outcome, up, unless they do announce some sort of program. If they open up the floodgates of easy money and the easy money flows into the market, then things are going to go up. What can you do in the meantime? I'll tell you what's relatively easy to do. Sell cash secured put options on stocks you don't mind owning. You know, in the state of Hawaii, we have a car registration that we have to pay every year. Mine's about $350 roughly. And how many, if I'm buying stocks, if I'm buying a good company, if I'm buying shares of a good company via selling via selling cash secured put options, so I'm buying increments of 100 at a time, and let's say a stock gives about $1.11 per year, right? $1.11. Come on, type for me. There we go. You can do it. If a stock gives $1.11 per year, and my car registration is about $350 at $1.11, how many shares do I need that I know next year my car registration is covered via dividend payment? How many shares? It's pretty easy, right? Let's add a little more, because it's increments of 100 when you're dealing with options. So maybe I can get up to 400, maybe 500. All right. What if the stock I'm looking at only pays 60 cents? Right? Now I know roughly how many shares I need. Over time, in the next 12 months or so, if I'm able to accumulate a little bit over 600 shares, that gives me a wiggle room for taxes and things like that. That doesn't include cash secured put option premium. That doesn't include potentially selling covered call options. And then what happens is, let's say I'm doing this on a stock that cost, just to keep the math easy, let's say I'm doing it on a stock that cost $5. Now, if you're getting $1 a year off a stock that costs $5, it might be a red flag. But just to keep the math easy, not to be a realistic example. Now, let's say you don't want to use dividends to pay for your car registration or something like that. Let's say you don't want to do that. That is something you can do. But another way you can look at it is, let's say you purchase a share at $5, and not including option premium, right? Just looking at the dividend. So the first year, it gives you $1 in dividends. So your cost basis was originally $5. So now you have a share of stock. You have $1 in your pocket. Your cost basis is $4. The next year, you get another dollar. Now you have one share of stock that's going to pay you another dollar in the next 12 months. And you've got $2 in your pocket, and the cost basis is now $3. And let's say you do this for 3 more years, right? Minus 1, because you're getting a dividend every year. At the end of 5 years, now you have a share of stock. You have your original $5 back. $5 is in your pocket. And you still have the share of stock. But next year, you get another dollar. And the year after that, you get another dollar. So, here's a question for you. I'm not going to give you the answer. You think about it. Return on investment. How do you calculate return on investment? What is your return on investment when the amount of money that you have into the investment is 0? Think about that. And if you want to have some help, search terms with that phrase and throw Robert Kiyosaki or Rich Dad in there, because that's where I learned it from. And it could potentially change your life. I know it changed the way I look at things. So it can be pretty simple. You don't have to overcomplicate things. Right? Keep it simple. Go to ihavesuccess.com. Watch that stuff in the description of the video. Download that stuff. Start your trading journey. It's only going to benefit you. You're going to become a smarter person. It's 4 minutes and 30 seconds. Watch that 5 reasons why you should be selling cash secured put options. Aloha.